I will start with the introduction of the history of the SBR program in the Netherlands, because always important. So where did you actually start? What were actually the starting points for this program? And then Hugo will take it over for the real estate valuations. But I will not start 2,000 years ago. I will just start at the 20th century. So that helps already a lot. So if you see into reporting, before we had an SBR program, actually, there was paper interaction. So you had to file all your reports to the tax office, to the Chamber of Commerce, to the Bureau of Statistics, to the banks, and it was very easy. Just one system, you printed it, you sent it via the mail, and everybody was happy. Life was very easy back those days for reporters. In the end, but then we came into the new century, and it got actually fun for people like us. We had digitization there. This was one of the first memories I have on digitization. So this is actually a floppy disk of the Dutch tax office, in which you can actually file your income taxes and send and write on the floppy disk your personal ID and number and send it via the mail, just regular mail, to the tax office. So this was my first experience with digital reporting, which was very, very nice for me. I found it very easy, and I was like, this is the future. Very, very nice. So, but of course, tax office had some digitizations, but others had as well. So what happened? Every institution had their own digitization processes, and everybody was doing it in a different manner in the end. So we had the floppy disks as for the examples. Then you also had some internet connections already, XML reporting, and then the next one, it was just sending a PDF via the email, which was also digitization. We call it now digital paper ourselves. So we had lots of different institutions requesting information from businesses in the end, with different semantics, with different manners on how to report, and want to have some standardization in that part. So we started the SBR program in the Netherlands. This is really a big summary already, so taking some steps there. But the early 2000s in the Netherlands, we already had some initial talks with the Chamber of Commerce, with the tax office, with the Bureau of Statistics, and also with the banks on how can we actually improve this in the Netherlands. How can we make sure that reporting gets easier in the end for all people? So we had a couple of goals there in the beginning, and some people here were actually at that table at that times. But one of them was reduce administrative burdens in the end. So you had to do lots of reporting in the end. How can we make it easier to report there? We had transparency and efficiency, which we really wanted to achieve there. And that's where we defined that we needed standardization on data definitions, on processes, and on technology to do that all and to make it happen, to do reporting much more easier in this in the program. So what started was actually the SBR framework of agreements, and the government started also a shared service center. So the shared service center were for all the governmental institutions to receive information from civilians and businesses in the end to report their XBRL data. So we had a harmonization and normalization on interfacing. So if you have to submit your data to the Chamber of Commerce or to the tax office, for instance, it's all the same interfacing. We had the same steps also in between. So the processing engine was the same, and we were all using the same language, which is of course XBRL in the end. So this is a start of the public program, and also an implementation of the SBR program. But the most important here is the framework of agreements, which is on top of it all. Then, of course, the Dutch banks were also very interested in this program, because in the end, banks also like to have some information from their clients there. So in 2009, it was announced that 3 major banks will adopt SBR for credit reporting in the Netherlands, and SBR Nexus was founded as a not-for-profit organization. So Hugo and myself are from SBR Nexus. So we are a cooperative of the 3 Dutch banks in the Netherlands. We are not-for-profit organizations to make sure that the 3 big banks in the Netherlands receive the same information on a similar manner. Because in the end, if you do standardization there, you also get software into the market, being able to report to the banks. And if the banks all need the same information, standardize that, you get a much smoother process in the end. So this is where we started. And there you can see here that we also made our own shared service center. So we had on the left the public shared service center from Logius in the Netherlands, and we have a private shared service center of SBR Nexus there. And why does it work? Because we use the same set of agreements there. So that's very important. We all use the same interfacing services, the same processes, same language, and that's why it's very easy in the end to report to the government and also to the banks. Now, we started with credit information. Why did we start there? Of course, there was already a program in the Netherlands going on, and we had the annual accounts already reporting or starting to report towards the Chamber of Commerce. So we could reuse lots of those elements to be sure we had similar kinds of reports there, existing reporting flow, and also, of course, existing law and regulations, since it's very old, the accounting standards in the end. So it was very easy, and we had the first real use case in which you had reporting to the 3 Dutch banks, same information, which is sent to them. But of course, the banks were hungry for more data, and this is where Hugo comes in.
Thanks, Rene, for your brief introduction about the SBR program and sharing your thoughts about the SBR organization, and in more specific, the credit information process. As mentioned, I will elaborate a bit more from the business perspective side on the SBR real estate program that we are running, and the SBR project, the valuation report project that we are currently running. So I will start with the why. So why did we start the program, the real estate program? Then I will continue on the how. So how do we execute and collaborate with all those parties that are involved? And I will summarize with the what. So what is the result of the project that we are running at a bank perspective? And I will summarize it all with some lessons learned from the program. So in line with the credit information, thousands of data points are requested by regulatories every quarter. So, for example, due to the Basel agreements, more and more of banks and other financial institutions facing that they have to report more and more information, and there is more supervision or tightening of supervision by regulatories. So, this is mainly due to the fact that you should prevent a new banking crisis. But this also means, or this results in that there is more capital pressure for banks. So if you look at those capital pressure in more detail, you see that there is some, or there are assets in the banking domain that are most intensive investments. So one of those most intensive investments is real estate, because of there is a significant investment needed on the forehand to finance those asset types. This makes it very interesting for the banks to have a look at those asset classes, at the real estate asset class, to lower that capital pressure by, for example, more efficiency in data exchanging data, but also in enlarging the data quality. And that's why the banks were focusing on SBR Nexus to set up those innovative way of exchanging information and improve the data quality that is received by the bank. However, when they start this program, they are facing some challenges. Go back to the previous slide. When we look at the credit information process, we see that there is existing law and regulations. There is a reuse of elements from the Chamber of Commerce entry points, and there are existing reporting flows. If you look at the real estate domain, there is limited law and regulations. So in the valuation process, there are some guidelines. So the guidelines is stated that you should take some information in your valuation report about the location, but it's not stated that you have to rate the location in a certain way. So that's a challenge. Another thing is the reuse of elements. There is a limited reuse of elements in the taxonomies of the real estate sector because it's very sector specific. Some general items can be reused, but not all of them. And there is limited existing reporting flow. So all the appraisers in the sector are do their thing or their reporting in their own way. There's not one general existing flow. So that were some challenges that we faced on forehand. So how do we come over those challenges? And the most important thing is that we have a driving force in the sector. So the banks are the driving force and take initiative to start the program. So together or in collaboration with these financial institutions, SBR Nexus determines the data that needs to be exchanged and determines the requirements needed for that exchange. Another important aspect is that there are some contractual relations. So the banks have a contractual relation with the real estate investor for sure, but also with the appraisers. So they can force the appraisers to not only deliver the PDF file, but also to share a data set. And in this way, the XBRL file, so the taxonomy. And based on that force or based on that pressure to the appraiser, we were also able to reach out to the software supplier that are used by the appraisers or the software vendors that are used by the appraisers to implement the taxonomies and to collaborate, to think along about the requirements that are set by the banks. So those things are, I think, big benefits in this private sector to give the taxonomy a push to be used. If we look a bit more to the process, so where did we start? We start with defining the end state of the data exchange that needs to be done in the real estate financing process. So this is the whole process, starting by sending KYC information and ending up by the valuation report. So in the sector, we had a shared understanding about all the steps that needs to be taken to get a loan, and then we split up the process in multiple phases and focused on, for first instance, on the valuation report. So that's on the right part of the screen. And after we created the valuation report or the taxonomy and implemented it in the sector, we focused on, for example, the rental information or other data products that needs to be exchanged for the whole financing process. So I think an important takeaway is that we all had a shared understanding about the whole process, but to split it in multiple phases, we were able to bring scope in the process and make a successful implementation. One other interesting thing in the data exchange that we are doing, if we are looking a bit more to the data flow that we are facing, is that there are multiple data products used during the data exchange. So the main common thing is the object information, and based on the object that we have, we can add some building blocks. So other data products such as rental information or the value proposition or sustainability information, but the object is in the central part of the data exchange. Another thing what's quite interesting to see is that in the data flow there is a validating role for the appraiser by validating all the information by a digital signature. So he is validating the information, and that information flow is coming back to the bank. So in the first instance, the bank system receives information from a client perspective, and by the end of the flow, the value of the appraiser validates all that information. So what is the result of sharing the data exchange through those standardized taxonomies is that if we look a couple of years ago, there was some information needed by the account manager to give a loan to the real estate investor or the entrepreneur in this case. So there was a lot of attention for the client of the bank and to create a real partnership. A financing process was these days about 10 days. These days about 10 days. So currently, or before the SBR area, we saw that the entrepreneur have to upload multiple documents, and the account manager was mainly focusing on gathering the right information and process all that information in the banking system. So there was no attention at all for the client anymore, or less attention for the client anymore. And above all, the process took no longer 10 days, but it was enlarged till 25 or 60 days. And in all that information, not all the information was needed, but only certain parts of that information was needed. So what was happening? The account manager of the bank was retyping all the information in certain credit reports. That was quite error prone, and the handling cost was large. So a lot of accounting managers were needed to process all the information. So if you look at the data flow back in the days, it was that the client had some information in his system based on a kind of data structure, and he was printing the information, sharing it with the bank employee. The bank employee was retyping it in the data structure of the bank. That was quite error prone, and finally there was a decision made about getting the loan. With the taxonomy that we are currently implemented in the sector, we were able to work system to system. So there was no retyping and processing the information by hand anymore. It was less error prone, and decisions can be made very earlier in the process. And the duration of the financing process went back to a couple of days instead of months. And above all, we can say that the account manager was able to pay attention and give advice again to the client instead of gathering all the information and processing all the information. This is more for the future perspective, that even based on system-to-system communication with standardized information, the bank is able to improve the business rules, improve the models to even make faster financial decisions. So when it's currently a couple of days to make a financial decision, it can be in minutes because of those models based on the standardized information that they receive. So some lessons learned from the program that we are running at the banks is that having a contractual driving force and having an initiator as the banks in this private sector is key to be successful, because they can push the market and they can force appraiser or other stakeholders to use the standardized documents instead of the Word files or the Microsoft Excel files instead. Another thing that is important is get a shared understanding about the end state. So based on this shared end state, you can take smaller steps to work on that end state in 10 years and get all parties to think along with you and to collaborate in that shared understanding. And other lessons learned are the validations for example, data quality are quite important. And what I say earlier, the collaboration with all parties in the sector is quite important to make it a shared innovation and to think along with each other to get the maximum out of the data exchange. I think that is what was it. Thanks for your understanding, and I hope that we inspired you in this private economy.
Thank you very much. We've got a few minutes for questions, if there's any questions.
You said that the bank no more rekeys the data. They don't do the retyping of data.
Yeah.
So who does that? Is it the customer who gives in the digital format?
Now, currently, the account manager is retyping all the information that is received by a large bunch of PDF files. And currently, these PDF files are history, so they are now focusing on the data stream that is standardized by taxonomies in XBRL. So there's no retyping or reprocessing by hand anymore. It's system-to-system communication, and because of the shared understanding of the taxonomy.
And maybe it's also good to mention it, because there are people working at the banks retyping information for their jobs, and they were the real estate experts. That's what they did, and now there was no retyping anymore. And what they currently saw actually was all reports in red flagged, like this is a wrong report, this is a wrong report. Now, why is that? Because if you get structured data, all the good data you don't have to look into anymore. So also lots of management also on the employees within the banks, teaching them on what is the difference now for them for the data they actually receive. So they really are used by using their brain again and not retyping information again, and really looking into the files and into the different reports on what's wrong and is it really a high risk investment or not. That was really a lot of work also within the banks, and we need all the people in the end. So this is not really for the banks to make it cheaper in the end, because we need employees. Everywhere is a shortage of employees. So let's use them in a proper way and use computers for things that we don't have to do anymore.
In the US, banks and other mortgage originators generally do not hold the mortgage on their books, but they securitize the mortgage. And I've seen over the last 15 years since we had the financial crisis an interest in standardizing the loan level data that goes together with mortgage securitization. So I wanted to sort of put that on your radar screen and just ask, is securitization something that happens in the Netherlands? And if so, have you thought about using the standard to support it?
Yeah, well, it's also good to state that this is about commercial real estate. So not about the houses. So this is of course a little bit different. So we are really, yes, I understand. But also you have your credit reports for those kinds of things to see if a company is still healthy or not. So all those things are indeed incorporated. And of course we are also adding more and more new data streams to our services.
So, if I understand correctly, each bank used to take the information they needed from the valuation reports and then use that. But does that also mean that each bank maybe had its own system and list of indicators? And so did you have to work to make them converge? And was that actually easy? They could see some conflicts?
There was a large conflict. Now it was quite difficult to collaborate with all the parties to get a shared understanding about what do you need, just what are the requirements for the data that is needed to report to regulators, but also to report for their own business rules. So on the one hand, we have the banks, on the one side we have the banks, and on the other side we have a large group of appraisers, and they have all their own way of setting up an appraisal. So that was challenging. But we are making steps in that. Yeah.
It's also, of course, a very important role for us because we are independent, because we are for all the free banks. So that's also our job, to align them to have the same data definition, the same data set. And that's, where the fun gets in for me personally.
And to add, we were focusing on the three largest banks in the Netherlands. But currently the valuation project is working quite good, and it's successful. So we see that other investors in the Netherlands also are looking at how can we add those standardized reports in our working flows. So then it becomes a real standard in the market, and not only for the 3 largest banks. So that's quite interesting to see.
So are those valuation reports publicly available, or they're only private?
They are private. Okay. Yeah. But the taxonomy that we are using is an open standard, so that can be found at our website.
Any other questions? I have one, hopefully very simple one of my own. The XBRL you're receiving, is that's normal XBRL or inline XBRL? Or?
Normal XBRL.
Yeah, I thought it'd be.
We are rendering it.
Okay, great. Thank you very much for your presentation. This is where I realise I've actually neglected one of my important duties, which is think about the speaker. So,